Good afternoon, everybody. This is Joe Cusick from the Cusick Group, securities offered by MoneyBlock with your Tech Talk report here at MarketStream.live. It's been an interesting afternoon. Currently, right now, just taking a look at the markets, we have the markets basically mixed. We have the NASDAQ basically break even, up maybe 50 cents. We have gold up about 680. We have the S&Ps down about 75 cents. And we have the Dow Jones up a meager 8 points. So we're basically strongly unched or just slightly in the red or slightly in the green. So really muddled market right now. But Tech Talk is really a segment that I want to talk about different technical patterns, tactics, pricing techniques that are going to give you the ability to eye potential ideas and investment opportunities with a lot more transparency. Now, the one thing about this is that you don't want to take this away as just a recommendation to buy and sell anything. This is just one way that you can start viewing, seeing what the market's pricing in for potential movement, seeing what the types of analysis are on past price history are telling you, so that you now have perspective. And really the goal is to give you that transparent look that really gives you a better risk reward and higher probability of potential success with any type of strategy that you're going to deploy. So today what I want to focus in on is not a series of stocks. I want to take a look at one. It's been in the headlines a lot, and I want to drill it down a little bit from a technical perspective, and that is going to be Twitter. Twitter has been in the headlines for the last month, basically, in merger and acquisition type chatter. In October, mid-October, there was chatter that there could be an integration with Salesforce, something of that nature. Then there were other names like Disney. The point being is that the stock got as high as 25 and then went down as low as 14. It's leveled off, and right now it's trading real close to that $17 and some change. As a matter of fact, if I just take a look at it right now, it's trading in that $17.70 area. So it's well off of its worst levels that we saw after the merger and acquisition chatter started to pull off. Now, with that being said, they had earnings, another binary event. The earnings on the surface look good. You drill it down, there is some question about whether or not they could actually get their ad model and revenue model really chugging in the right direction. But if you take a look at the technicals, where the fundamentals might be a little bit muddled, and you're also looking at some of the binary or the ancillary discussions about mergers and acquisitions, if you just look at the price action, let's really see where the stock is. And over the last month, like I said, you've seen a pretty significant range. But today you're seeing that the stock held that $17 level. It's actually up at its best levels right now, almost up 30 cents. And it's now settling above that $17 mark. Now, this is critical because now you have a support level. That support level also happens to be the 200-day moving average, which is long-term support, right? You're taking 200 days of past price history, you're plotting it on a line and averaging it out. That is the support level. So if you plot that on a chart, that could be where you're looking at your support. If that's broken, again, if some further merger and acquisition type of talk comes out, that could impact it, but that's your support level. The resistance is going to come in where past support was, and that's going to be right around that 3-week high range, and it's going to be that 1830, 1840 range that you're going to start to see that Twitter, if it can break through there with some conviction, and you could see it with conviction, that's accentuated by volume, not just price action, but volume behind it, then you could see a run to get up and back into that $20 to $21 level. And so that's the thesis that we're working with right now. And as a matter of fact, if you actually look at the options in Twitter, you can see that going into next week, The options are pricing in the potential for the stock to move plus or minus $1.32, which would get us over that $18 and 18. It actually would get us into that $19 range, which is going to break through that 1870 level that we're looking to break through. It has a 1 month estimated move of plus or minus 222, which would then get us into right now that $21 range, which is what we're looking for, a potential extension to the upside. Now, with that being said, remember these ranges, it's pricing in the potential to go up that much as well as potentially go down that much. So there is, that equivalency quotient that you want to see here. But right now, if you're going to look at it, the fundamentals and the technicals, with having clear support at 200 days and moving average, holding that support, now rallying, and if it can get through that short-term resistance, which happens to be getting closer to that 50-day moving average, which is his midterm resistance, then we could see that the stock could get some legs to the upside. So that's your technical talk for today, and I want to thank everybody for being on. This is Joe Cusick from the Cusick Group, securities offered by MoneyBlock, and we'll be on with the closing bell here at MarketStream.live, and so join us at 4:30 Eastern Time. Till then, have a great rest of the trading session, and we'll see you at the closing bell. Take care.